by this time next year, wouldn't surprise me one iota if we saw gold revalued to a level that would shock people. And it's an option that's staring them right in the face, and I think it's hard to ignore. So I'm not one for making predictions like this, but I think it's just too much is happening that is leading this way for it not to be understood that the narrative is being rewritten right in front of us on gold. And now with Russia coming out and saying silver too, and China buying up all the concentrate and the doré all around the world, gold and silver have never been more important.
Since 2021, central banks have been purchasing record amounts of gold, driving this year's rally to consecutive all-time highs. The key question now is whether a single central bank could spark a similar impact on other precious metals. Central banks ceased accumulating silver in the mid-1850s, and by the early 1870s, the world had transitioned away from the silver standard. However, this year, producers have firmly pushed to add silver to the U.S. and Canadian governments' lists of critical metals. Miles Franklin Precious Metals CEO AndySchectman argues that central banks are deliberately amassing gold, signaling the possibility of a significant revaluation that could profoundly affect the global economy. He references a historic discussion involving Henry Kissinger, highlighting that a gold standard gives nations considerable influence in international finance. In August, central banks reported a net gold purchase of 8 tons, marking a significant decline from the high levels seen earlier in 2024. This reduced demand is the lowest since March, when central banks recorded a net sale of 2 tons. The August figure is also well below the 12-month average of 33 tons. While the outlook for the remainder of the year remains positive, central bank gold purchases are expected to fall short of last year's total. Andy suggests that such a revaluation may be a strategy for central banks to tackle debt and inflation without triggering hyperinflation or default. He cautions that as more people realize gold's true value, precious metals will become scarcer, making early investment essential. Ultimately, he believes that those who possess gold will wield power in an increasingly unstable financial world. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 11% of you are subscribed, and we aim for 1,000. Your support will make a big difference.
The last 4 years, the dollar's lost 25% of its value. Clearly, inflation wasn't transitory. We've added over $300 billion to our national debt in the last month, which is now approaching $36 trillion. And, both candidates are working for the Fed. They're both singing the Fed's book. They're both talking more lower rates and lower dollar. And so this is not going to get better anytime soon. This has never been more important on gold and silver. And I'll tell you, all the backdate sovereign coins are gone. They're all gone. Now it's just the current stuff, right? And the 10th ounce Eagles 2024, gone, sold out. Won't be any until 2025. We still have some in stock, but when they're gone, that's it. This is how it begins. As we get closer to the election, I would suspect that we will end up having a challenging time getting product. That's assuming that there isn't an event, something that wakes people up on a grander scale. So, I hate to sound alarmist and say you better hurry up or else, but I think you ought to hurry up or else, because I think getting product could ultimately be the biggest challenge. When we start to see it become the backdates go and then certain issues of the current mint issues disappear, that's how it always happens. There is an awakening by people. They are beginning to feel, even if they're not able to really articulate it, that something's happening, something's coming. And there comes a point where it's every country for themselves, or every man for themselves. And these countries like Australia or South Africa or the UK or even Canada may look at selling product to the United States very differently than they once did, especially when gold and silver were, tertiary investments at best, second, third, or fourth in line, maybe even more after things like stocks, bonds, real estate, and other forms of insurance and whatnot. So things change. And I think we are getting to that point, this collective realization. And it's all going to be square in the face of the G7. And these are the countries that are selling gold to the United States, with the exception of South Africa, and may look at doing just that very differently and be more nationalistic and take care of their own. So Yeah, I think that this is exactly how it happens. I was talking with my dad the other day and said, yeah, I don't think there'll be gold confiscation. They'll just make gold so expensive that no one can afford to buy it. And this is the gold revaluation. And I want to, I've read this before, but I want to read it one last time before we sign off. I think it's really important to go back to, sometimes the further back we go, the more clear things become. And if you don't understand history, you're doomed to repeat its mistakes. And we talk about going all the way back to, and I may have read this on your show before, but for those who didn't hear it, it's worth repeating one more time as we sign off. And this was a conversation between a man named Thomas Enders and what's his name? Kissinger. And it was a meeting that they had, and this was from the Freedom of Information Act, meeting they had in 1974. And it goes like this. Mr. Enders says to Kissinger, it is against our interest to have gold in the system because for it to remain in it would result in it being revalued periodically. And although we still have some substantial gold holdings, a larger part of the official gold in the world is concentrated in Western Europe. This gives them the dominant position in world reserves and the dominant means of creating reserves. We've been trying to get away from that into a system which we can control. And Kissinger says, but that's a balance of payments problem. And Mr. Enders says, yes, but it's a question of who has the most leverage internationally. If they have the reserve creating instrument by having the largest amount of gold and the ability to change its price periodically, they have a position relative to ours of considerable power. They're going to revalue the price of gold. I believe that in my soul. And when you see the central banks of the world, who are the most well-informed traders on the planet, not only wickedly accumulated at a level that is increasing year over year, month over month, day over day, hiding how much they're really truly accumulating, and then speaking continuously of gold being held in the revaluation account and the prospect of indeed revaluing it, it will happen. I do believe that. And they will use it to reliquify the system, which will create massive inflation. But it is something that I think that they will do.
Gold is often viewed as a hedge against inflation, though in practice, it is an imperfect one. While there was a positive correlation between gold prices and inflation from the mid-1970s to the late 1980s, this relationship became weak or even negative during the 1990s and 2000s, a period marked by global disinflation. Recent gold purchases by central banks, particularly in emerging economies, signal a shift towards diversifying away from dollar-denominated assets for macroeconomic and geopolitical reasons. Last week, news reports indicated that the Russian government is considering spending 51 billion rubles, $535.5 million, over the next 3 years to bolster its precious metals reserves. Schectman concludes that the convergence of factors, central banks accumulating precious metals, geopolitical shifts, and ongoing market suppression, is actively reshaping the global financial landscape. He cautions that overlooking these developments could be costly, as those who are prepared and invested in gold and silver will have a significant advantage in navigating the uncertain times ahead. Now, let's redirect our attention to a video.
The Fed drops short-term interest rates down, but at the same time, we see the back end of the curve start to go up. And that to me is the market or big money selling long-dated claims for the future delivery of dollars, which increases interest rates for the bonds. And this is not a good omen. This is at the same time we see them buying gold and silver at a rate the world has never seen before. And I think that for a long time, we had, it seemed, this geopolitical cooperation, in particular in the price of oil and the price of gold, with the Saudis and with other countries. And it seems as though the markets are no longer discounting this geopolitical cooperation, at least in my mind, in terms of the price of oil and in terms of gold. And they are starting to separate themselves. We can look at a country like, for example, in this case, a country like Poland, who has now decided to continue to purchase gold. They're already at 420 metric tons. They have more gold now than the EU. And when you talk about what Adam Glapinski, the head of the central bank, said, is that he wants to get it up to as high as 20% of their foreign exchange reserves. And I want to remind people what Adam Glapinski said when asked recently, why is it that you buy gold? And he says, because gold will retain its value even when someone cuts off the power to the global financial system, destroying traditional assets based on electronic accounting records. Now, of course, we don't assume that this will happen, but as the saying goes, forewarned is forearmed. When you hear things like this, it's also noteworthy to note that China, Hong Kong, and the UAE all have sophisticated precious metals markets. The one in Shanghai, the volume has now surpassed the COMEX dramatically with a 400% increase in volume over the past 6 months or less. It's now the second most actively traded market in the world. You can see the pieces are being put into place. It's not just gold. We find out that Russia's federal budget draft includes plans to acquire not just gold, platinum, and palladium, but for the first time ever announced by a central bank, silver. And it's the first time that the central bank has ever made a significant announcement in this regards. And, could it push it above 50? Yeah, why not? When you have stupidity to the degree that we have, suppression on the COMEX market, on the LBMA, yeah, it's rocket fuel. And maybe that's why we see the Citibank analyst, Max Layton, come out and say that, first of all, silver's up about 35% so far this year, but they're predicting over the next 3 months a rise up to $38 and maybe even higher. So all of these things are beginning to factor into into the global picture. And that discounts all the stupidity that we are seeing at home.
The global economic landscape is caught between recovery and uncertainty. While unemployment remains low in major economies like the U.S., the underlying factors that once supported economic solid growth are weakening. Persistent inflation and aggressive monetary tightening by central banks, including the Federal Reserve, could trigger economic slowdowns or even hard landings, which may enhance gold's appeal as a safe haven asset. However, the strengthening U.S. dollar and rising interest rates could dampen some of gold's attractiveness, as recent market trends suggest. Do you think the global economy is headed for a hard landing? And if so, how might this impact gold's role as a safe haven asset? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.